Alright, so this video is going to be about vertical analysis. This is the one and only chapter, I think it's chapter 9 right now in the current version of the textbook, but this is the only chapter that really focuses back on financial accounting. I know we're doing a managerial accounting course, but we wanted to give you a little bit of flavor of financial accounting. Vertical analysis is a method that allows us to do more than just look at a set of numbers. A vertical analysis really adds a bit of power to the numbers that you're looking at and really allows you to analyze them a bit better. So what it is basically vertical, up and down. We're taking a look at a single year of activity. So for example, we could be looking at 2014 and we could be looking at the balance sheet. So what we're going to do is we're going to go up and down 2014 and we're going to express all of those numbers that are on our balance sheet as a percentage, right? And the question, there's multiple questions that come up, and well, as a percentage of what? Like, what am I expressing it as a percentage of, and why would I even do this? So let me start by talking about the why. Why do we do a vertical analysis, and why does it add value? You can see at the top of this slide here, the way that we come up with the percentage for the report is to take the dollar amount of our comparative figure and divide it by a base amount. We'll talk about the mechanics of how you do all this in a second. But why do we do it? Well, I'll phrase a question to you, and you can think about it in your head. Obviously, you can't answer me. But let's say that I'm giving you a company, and I'm telling you, and this doesn't necessarily apply to vertical analysis, it's more of a horizontal analysis. But let's say that I tell you company A had an increase in sales from last year to this year of $30,000. So company A had an increase in sales this year, from year over year, from last year to this year, of $30,000. And I ask you, is that good or is that bad? In your head, you can think about it for a second, and you might say, oh, well, it's good. At least it went up. That's great. And you wouldn't be wrong. At least it went up. That's a good start. But it doesn't really tell me whether it's great. It tells me that it went up and that it's good, but it doesn't tell me whether it was great or whether it was just okay or whether it was meh, right? We don't know. But watch what happens when I add a percentage to that. So now, same situation, company A, their income is increased from last year to this year by $30,000, and then I tell you that that's a 75% increase in sales. All of a sudden, that percentage added weight to my analysis, and now I can say, great that it went up by $30,000. Amazing that it was a 75% increase in sales. So they had a fantastic year. Okay? So as soon as you start adding percentages, it adds weight to the way that you can analyze your numbers. Alternatively, I could have said it was a $30,000 increase and it was a 0.001% increase in sales. And you would start to think to yourself, oh, well, this is basically the exact same as last year. It was a minuscule increase, and that's probably not what they were looking at or looking for. It's okay that they didn't lose money, but it's not fantastic. So as soon as you start to add percentages to things, it allows you to analyze things in a different way. When we talk about vertical analysis, using the percentages does more than just that. It allows us to compare dissimilar companies of different sizes. And it allows us to compare ourselves to other companies as well. Part of the reason we do these types of analysis, vertical and horizontal analysis, is that we want to compare. We want to compare our results to ourselves and to others. So if I was, a Frick's Fish and Chips, just a small fish shop, right? I smell. That's funny. I think I might leave that in. I sell fish and chips. And I want to compare myself to another, kind of fast food joint. So if I wanted to compare myself to, say, a McDonald's or to, say, a KFC, if I just went and I did the comparison on a dollar-for-dollar basis, I would have no comparability. Like, the amount of money that I would generate wouldn't even make the rounding on a set of financial statements for McDonald's or for, Kentucky Fried Chicken. But what I can do is I can express their financial statements in percentages, and I can express my financial statements in percentages, and then I can start to compare myself. So instead of looking at McDonald's, who have billions of dollars in revenue, and I have $100,000 in revenue, like, again, not comparable, But if I start to look at it on percentages, and so for example, I take my sales minus my cost of goods sold, and I get my contribution margin, or my gross profit, right? And it's gross profit actually in this case. I can start to compare my cost of goods sold as a percentage of sales versus KFC's cost of goods sold as a percentage of sales, right? So if KFC, their cost of goods sold is, 45% or 40% of sales, and mine is 60%, well, now I can start to say I'm not doing quite as well as KFC when it comes to my cost of goods sold. My cost of goods sold is a greater percentage of my sales than KFC's. So what can I do to get better there? What can I do to kind of try and compete against them on that characteristic? Right? It allows you to do a comparison of companies that would be dissimilar just simply based on size. Right? So how do we do it? And what is and when I say percentages, what are we going to base that on? Well, whenever we do any type of vertical or horizontal analysis, the first thing that we always want to do is we want to set a base. You need to set your base. So when you look at your formula at the top of this slide, it says the percentage equals the amount of the comparative figure divided by the base amount. So we need to come up with that base amount. That's always step one. Whether it's vertical or horizontal analysis, I need to know what is my base amount. For a vertical analysis, it's different for each type of statement, right? It's different for the income statement than it is for the balance sheet. When we look at the balance sheet, when we say let's set our base, the base amount we're going to use is always total assets. So I'm going to go to my balance sheet, and let's say we're analyzing 2014. I'm going to find out what are my total assets, and I'm going to set that as 100% right on my balance sheet. I'm going to have a dollar column, and I'm going to have a percentage column, and I can show you what that looks like. I'll just switch the slide quickly. So you can see this is a vertical analysis. You can see you have a standard list of accounts down the left-hand side, but now we have an extra column under each of these years, 2009 and 2008. We don't just have the amount, but we have a percentage column. Okay? So when we're setting these percentages, the first thing we're going to do is we're going to go find total assets on the balance sheet, and we're going to set it to 100%. Okay? Then what we do is we express every other single number on this balance sheet as a percentage of total assets. So the way you get this 29.6% here in the 2009 column is to take, for current assets, is to take 1,000, this is in thousands, so $1,496,500. You take that and you divide it by the total assets figure of $5,051,500. So you take the analysis figure, which is this 1496.5, and you divide it by the base figure, which is the 5,051.5, right? So if you do that and you run the math, you'll end up with the 29.6%. Okay? That base figure does not change. So when we go and we do property, plant, and equipment, I take $2.888 million and I divide it by $5.051 million. This figure here, the property, plant, and equipment figure, divided by the total assets, and you'll see that property, plant, and equipment represents 57.2% of your total assets. Okay? Again, it stays static. The base doesn't change. It even applies to liabilities. So as I continue down the balance sheet, when I'm taking each one of my current liabilities or long-term liabilities, I just grab that figure, whatever the current liabilities is. So maybe it's accounts payable. I take my accounts payable and I divide it by my total assets of $5,051,000. Okay? Step one is always set your base and then express everything else on that statement as a percentage of that base figure. Now when I do it for 2008, again, this is a vertical analysis, so I'm looking at 1 year at a time. So when I come over here to 2008, if I'm doing a comparative set of financials, I'm going to set my base, but in 2008, it's still going to be total assets. But in 2008, the total assets were only $4,837,600. So again, we set that to 100%, and then we express every other number in the 2008 column as a percentage of total assets. So you can see, and then what that allows us to do is it allows us to go year over year between 2008 and 2009, and we get to compare, the makeup of our financial statements on a year over year basis. So in 2008, property, plant, and equipment represented 56.9% of our total assets, and in 2009 it increased to 57.2%. Okay, so you can analyze dollar changes and percentage changes, but it just makes for a more powerful analysis tool. Okay, so that's how we do it for the balance sheet. So what's the base on the income statement? Well, the base on the income statement is your net sales. So if we're looking at the income statement, what we're going to do is we're going to go find that net sales figure, and we're going to set it to 100%. So you're still going to have a dollar column, a dollar amount column, and a percentage column. We're going to go find that net sales, and we're going to set it to 100%. And then we're just going to express everything else on that income statement as a percentage of that figure. So if net sales were $100 and cost of goods sold was 80, well, cost of goods sold is 80% of my net sales, the $80 divided by the base amount of 100. Okay? And you just, functionally and mechanically doing a vertical analysis is a bit repetitive, and it's not really all that difficult once you get used to it. Where the difficulty and the challenge comes is then analyzing what those percentages mean. But mechanically, that's all we're going to do, is we're going to find our base, we're going to set it to 100%, we're just going to express every other single number on that statement as a percentage of the base amount. So let me pull up an example here. I'm going to open up an Excel sheet here. We're going to take a look at a quick little vertical analysis. Okay, so here's my vertical analysis. You can see that I did the income statement. So the question says, use the information below to complete a vertical analysis for the year 2014. So I have net sales, I've got cost of goods sold, gross profit, less my operating expenses will lead me to my earnings before income tax. Then I subtract my income tax expense to get to my net earnings. Okay? If I gave you this information and I asked you to complete a vertical analysis, the first thing you'd have to do is you'd have to set up this percentage column beside the dollar amount column. And then what we're going to do is we're just going to go through and we're going to express everything as a percentage of our base. Step one is always to identify the base. Again, on the income statement, that's net sales. So I set my net sales figure to 100%. I'm going to take 1914 and I'm going to divide it by 1914. That's 100%. Okay? To complete this, then what I do is I just go down and I take every other single one of these numbers here and I express it as a percentage of this base figure. So if you're working on this and you really wanted to identify yourself or make sure that you didn't kind of get lost, what I would do is I would identify my base and then highlight it. Circle it, do something so you know that that's the figure I'm expressing everything else as a percentage of. That way you don't get lost in the shuffle of a bunch of different numbers. So for cost of goods sold, what I do is I'll take that $1,612 and I'll divide it by the $1,914. So 1612 divided by 1914 is 84.2%. Okay? Gross profit, same thing. I take my $302 and I divide it by my base amount of $1,914, and that's 15.8%. Operating expenses, you just continue the trend. 218 divided by 1914, and so on and so forth until you get to the very end of your statement, and then you have a set of financials that's not just expressed in terms of a dollar amount, but also in terms of a percentage. Right? What it allows me to do is to compare myself internally to what I was either expecting from my budget or internally to what I've done in previous years. It also allows me to compare externally. So if I was comparing my business to, say, maybe my main competitor, I could go here and I could take a look and I could say, well, my gross profit's 15.8%. What is theirs? And obviously we would like to have a higher gross profit. So if I was at 15.8% and they were at like 13%, then I'd be happy. I would say that we're more efficiently either manufacturing or distributing or whatever it is, our product than our competitors are. But if then I came down to the net earnings figure and I saw that my net earnings were 3.5% of total sales, or of net sales, and my main rivals was 6%, well, all of a sudden I've got a bit of an issue there. I was doing better than them up until this point here at the gross profit line, but by the time I get to the bottom of my statements, they're actually doing quite a bit better. So where's my issue? Well, it can lead me to the questions of, well, maybe my operating expenses are way higher than theirs. Maybe I need to take a look at my operating expenses and find spots where I can kind of trim the fat, right? Where I can be a little bit more lean in my business practices to save me money and increase my profitability. But vertical analysis allows me to do that, as opposed to just comparing my $67 in net earnings to their net earnings. I can base it on percentages as well, and it just gives me more insight. So you do that same kind of concept for a balance sheet. You would go to the balance sheet and you would find the base amount, kind of highlight it, set it to 100%, and then you express everything else as a percentage of the base. Okay? And that's all there is to a vertical analysis. So the next video that we'll talk about that's in the list here is going to be the horizontal analysis. So similar idea, but instead of going vertically up and down a single year, what we're going to do is we're going to go across years, and we're going to try and determine how did things change on a year-over-year basis. All right? So that's the end of this video. We'll see you in the next one. Cheers.